Seven auction is you cannot afford to make your mortgage payment. My name is Hector Villatoro. If you are curious about to have more information about what will be the best way to approach if you cannot make your mortgage payment, this is the place. First, you need to take action very fast because the bank will increase penalties and will create damage to the credit. Some of the auction include a forbearance, refinancing, renting, or selling. But let's talk about some of them. Number one that expert recommend is forbearance, two refinancing, three mortgage modification, four the sale of the home, five renting, six short sale, seven giving the house back to the bank or deed in lieu of foreclosure. I'm going to cover each of one of them, but I just want to tell you in general because if you have lost your income or experience financial problems, it is important to take action immediately or to avoid any problem. The first thing will be to contact your lender as soon as possible and request a forbearance or a modification. This can help you avoid the fees and negative credit consequences that come when you're late on the payments. Consider some of the following options for what you do if you cannot make the payment. Which action is most applicable to you depend on the reason for your financial situation and where you expect those challenges to be temporary or more long term. Plus, what make the most sense for you and your family. Let's go over each and one of them because not not every approach can be available or feasible for each family. Let's talk about forbearance. If you cannot pay because you have temporary hardship, you can talk to your lender for a forbearance, which can help you reduce or stop the mortgage payment for at least a year until you become stable in your finances. If they offer you forbearance, the lender will agree to refrain for foreclosing your home during this process. You must keep in mind that the bank will expect you to pay back whatever amount of money you're not paying during that time frame. It can be a payment plan or one lump sum. Let's talk about refinancing. If you didn't fall behind yet and your credit is good, taking a mortgage with a lower monthly payment will make it more affordable. Refinancing works best if you have at least 20% of equity in your house and you can get a new loan at a substantial lower interest rate than what you have right now. The refinancing process takes some time, even months, and you must, if you want to keep your good credit, paying the mortgage during that time frame to eliminate the possibilities not being approved. Now, if you already miss a payment on your loan, it might hurt your possibilities or chances of being approved for the refinance process. Now, let's cover about loan modification. In the loan modification process, your lender adjusts your loan to make your monthly payment more affordable. Normally, extend the time frame of the loan by several months or years and payment, which means that you will be paying more money on interest that it did under the first loan. It might make sense or feel that it's worth it if you hope to keep your home for longer time. Banks are not under obligation to give you a mortgage modification and typically do so for customers with a strong credit who can show that they are able to keep up with payment under the new loan terms. Let's talk about the possibility of sales. If the home has some equity, more than what you owe, selling the house may be make most of the financial sense, especially with the way the market is right now. A home in good condition may sell really fast. Just keep in mind that the mortgage payment you miss during the process of sale can have number one can have negative impact on your credit report and credit score, and also the money that you don't pay during the process of sale, it will be recuperated when you sell it. Number five, renting. If you find a way to move in with friends or family for a lower rent, renting the current home, it could be a good option as long as you can have or produce the rent produces enough money for you to pay the mortgage payments. Now, before becoming a landlord, keep in mind that there are a few obligations as landlord that you must keep in mind and will increase. Many things will increase, like the insurance or other expenses like repairs. They will be the same, and you are also responsible for it. You still be financially responsible for the home and all any responsibility that you may have. You need to arrange to repay the mortgage payment that you miss while you're setting up the rental process, meaning that you're still obligated to pay back everything. Additionally, if you go into foreclosure after renting out the property, once the tenant finds out that you're losing the house, they probably stop paying you, and also they can sue you for misleading you, leading them. Now, number six, you have the auction of short sale. When short sale happen, short sale is when the lender agree to sell the house and accept a lower amount in order for you to complete the sales. Like the names explain, is like if you owe more money, 500,000, and the market value 400, the bank will take less. It short sales, the benefit of the short sales that create less damage to your credit than a full foreclosure. I may help you avoid paying a deficiency judgment. Note, however, that some state consider forgiving deficiency judgment to be taxable. That means that if the difference, you might end up with a bill from the IRS. Lastly, deed in lieu. It's just basically signing the house back to the bank. It's a voluntary foreclosure. In this case, you agree to vacate the house and turn the key over to the lender in exchange for the lender to terminate or releasing you from any obligation regarding the mortgage. This can be less costly and time consuming than the foreclosure process and may even include sometime bank will give you cash for keys for you to have a fresh start. Obviously, there are some situation that doesn't make sense. You're gonna have to pay rent in any way. As a form of a debt settlement, deed in lieu of foreclosures have has negative consequence for your credits, but they are typically less severe than the regular foreclosure. The bottom line is this: struggling to pay your mortgage or any other bill is never pleasant, and neither are all the options listed in this or mentioned in this video. Some some may require to give up your home. Other diminish your credit score or both. But if you're in the survival mode, sometimes the best way to do is to try to contain the damage and take action option that leave you in the best position to have a fresh start. No matter how difficult is your financial outlook, being proactive can help you avoid foreclosure or bankruptcy and move you closer to getting back on your feet. Whether it's in your current home or another, on waiting up ahead. Having a good idea where your finances stand can help you if you have any situation, if you have if you're facing any problem paying your mortgage, or you're curious to find out two different options. Because in my company, all my agents are trained to try to help you sell your home. Many of the things we do, we normally do it for free. Keep in mind that is one day you decide to sell, we're here for you. So that is our benefit. We specialize for the past many years. We've been helping people who, for whatever reason, have issues paying their mortgage and fix the problem. And we've been able to help people save their house. But it's at the end we don't have any solution, we can tell you that either way we can help you. We can call the bank for you. We can help you establish a modification, and in many ways we can help you. My name is Hector Villatoro. I'm the broker for Arvy Realty. Don't forget, if you want to have good information, subscribe to our channel, and we will happy to find information relevant for the real estate field. 631 617 5135. Thank you very much.